G'day everyone, welcome back to Pete's Investing. Today is April 17, 2023. This is the US dollar DXY price update. Got the daily, the 4 hourly and the hourly charts, and you can see they're all in decline with the CCI 1500 and the moving average 400 in decline. So only primarily short positions, although there is a potential break above the moving average here on the hourly chart. So we'll drill down on the daily first. Zooming out, you can see there I've got this support level at 1051. It's been there for a while, and the price actually came and bounced off that quite nicely since we drew it back here, and also this descending diagonal. So I'll talk about that in the lower time frames, but it's currently bounced off that lower support level. On the 4 hour chart, again the CCI is still in a pretty strong decline, but notice the bounce off that support at 1050. Now there's a few diagonals here. I've got this wedge that was formed with this ascending trend line, and also this descending one recently drawn. But when I zoom out, you can see there's a higher level descending line above all of those. So I've got this shorter term descending line between those tops there. Now let me go to the hour chart to explain couple of things here. If I zoom in that little time frame there, from early April to, the hourly chart from the 11th of April to the 14th of April on the hourly, there's a Fibonacci retracement. Now you'll see here it's currently sitting at the 50% retracement level, and that lower level diagonal line that was drawn, this one here, if the price comes and bounces off that in the coming hours, and that'll be probably as this declines, that's near the 61% Fibonacci retracement level. So it may well bounce to the downside, in which case further short positions may be made available. So to understand how to properly use that or trade that as a trading idea, we've got this fractals. So again, we don't take any long trades when all three timelines are trending in the same direction. We only trade in that direction. In this case, short only. We don't take long trades. So you can see here we use fractals. So it would have been nice if you've traded these positions when it broke below the fractals. So you could have gone short there, taken a small percentage gain there. It broke down again at that point there. It would have taken another little trade there. Broke down there again, another little trade there, and it's currently in a bit of a retrace to the upside in that range. Now again, if it may come up and bounce down from this 61% level, and that'll coincide with this descending trend line as well. Now if it breaks above that, and it breaks above the 61%, then it may start a slight correction to the upside, in which case we've got to be prepared. Don't take any long trades yet until we see the 4 hour at least start trending upwards. So long trades should not be taken at all until the higher time frames trend in that direction. So at the moment, possible short trades if this starts bouncing to the downside, and as soon as that breaks to the downside of the fractals, that would be an opportunity to take short trades. To understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like the channel further on Patreon, and we'll see you in a future video. Thanks for watching.